Yes, I'm selling, and no, this video is not a joke. Retail is coming and they are coming in hot. Now in this video, I'll tell you exactly why retail is coming, when retail is coming, and how you can use them as your exit liquidity. Also, if you find a pack of Wrigley Spearmint Gum in this video, then be sure to comment the timestamp to be eligible for my giveaway this month, which is a free Tangem Hawa wallet. So let's look at two metrics here. One is emotion and the other one is facts. I'm gonna start with the facts first, for the simple reason that you need to understand what is going on in the market to be able to understand retail. Maybe you've heard about it or maybe you didn't, but a key metric is the M2 money supply. Now the M2 money supply is like a big basket that holds all the money in an economy, not just the cash in your wallet or your checkings account, but also savings accounts, small certificates of deposit, and even certain types of investment funds that are easy to access. Think of it as a measure of how much money is available to people in a relatively short time. It's broader than something called the M1 money supply, which only includes cash and money in checking accounts, making M2 a better picture of an economy's liquidity, or how much money is flowing around. Now, why does this matter for crypto and trading? Well, M2 is like a pulse check for the economy. When the M2 money supply grows, it usually means central banks are adding more money into the system. This often happens during times of economic trouble, like during the COVID-19 pandemic, when governments wanted to keep economies afloat by putting money in people's hands. With more money circulating, people start looking for places to invest. Stocks, real estate, and yes, cryptocurrencies all become attractive because they can offer better returns than just holding cash. And this is where Bitcoin and other cryptocurrencies come into the story. Many people see Bitcoin as a hedge against inflation. That is a way to protect their money when traditional currencies lose value. You see, if M2 grows too quickly, it often leads to inflation, where the value of money decreases and things get more expensive. But Bitcoin has a fixed supply, which makes it appealing during times when people worry about inflation. It's like digital gold, something to hold on to when you think regular money might lose its value. Traders and investors also watch the M2 money supply to understand what might happen in markets. If the M2 is growing, it's usually a sign that people will have more money to spend or invest, leading to a rise in asset prices, including cryptocurrencies. This kind of environment is called risk on, meaning investors are willing to take more risks for higher rewards. On the flip side, if the M2 stops growing or even shrinks, it usually means central banks are pulling money out of the system. And this can make people more cautious, causing markets to slow down or even drop. That's a risk-off environment where safer investments like bonds become more attractive. During the pandemic, central banks expanded the M2 money supply at an unprecedented rate. This flood of new money didn't just help people and businesses, it also fueled one of the biggest crypto bull markets we've ever seen. With extra cash, people started pouring money into Bitcoin, Ethereum, and other cryptocurrencies, pushing their prices to all-time highs. But when central banks began to tighten the money supply to fight inflation, the flow of easy money slowed down and crypto markets cooled off. So understanding the M2 money supply helps traders and investors anticipate where the markets might be headed. It's not a magical crystal ball. Other factors like interest rates, new crypto technologies, and regulations also play huge roles. But M2 gives a big picture view of the economy's liquidity and how much money is out there that could end up chasing investments like crypto. For traders, it's a key tool to help navigate the unpredictable world of markets. Now, before we go on to the rest of this video, I have to make sure that you realize that I'm not a registered financial advisor. My videos are for educational and entertainment purposes only. Always do your own research and only invest money you're willing to lose, because even though you can gain a lot in crypto, you'll most likely lose it all. Now, if you do gain a lot, you have to get yourself a Hawa wallet, and my personal choice is Tangem, and I can offer you an exclusive discount with my link down below. And if you know people that are new to crypto, maybe you can offer them my cryptocurrency course as well.
Welcome to Crypto with Rico presents the Ultimate Crypto Course, a course designed to take you from crypto curious to crypto confident. Whether you're just beginning to dip your toes into the world of Bitcoin or looking to dive deep into decentralized finance, NFTs and the metaverse, you've come to the right place. Here, you'll get the knowledge you need to understand how cryptocurrency works, how to secure your assets, and most importantly, how to build a solid portfolio that positions you for long-term success in this rapidly evolving space. Get the course now while you still can by clicking the link in the description, and let's get cracking.
Crypto trading relies on a mix of technical, on-chain and macroeconomic metrics to make informed decisions. There are a few critical metrics that can influence your trading strategy. You've got chain metrics, technical analysis, sentiment, macroeconomic factors, the tokenomics, ecosystem-specific metrics, and risk management metrics. Now, if we look at macroeconomic metrics of Q3 and Q4 of this year, the global economy exhibited a tapestry of resilience and emerging challenges, as reflected in key macroeconomic metrics across various regions. According to the International Monetary Fund's October 2024 World Economic Outlook, the global growth was projected to stabilize at 3.2% for the year, with expectations to maintain this rate into 2025. This steady yet modest expansion was underpinned by easing inflationary pressures anticipated to decline from 6.5% in 2024 to 3.8% in 2025. In the United States, the economy grew at an annualized rate of 2.8% in the third quarter of 2024, slightly below the forecast of 3%. And this growth was primarily driven by robust consumer spending, which increased by 3.7%. However, business investment saw a modest rise of 0.3%, and the personal saving rate declined to 4.8% from the previous quarter's 5.2%. And these figures suggest a cautious optimism, with consumer activity buoying the economy amid concerns over savings and investment trends. The European Union experienced varied economic outcomes. The Eurozone's GDP growth was recorded at 0.4% in the third quarter of 2024, indicating a modest expansion. In the United Kingdom, GDP increased by 0.1% compared to the previous quarter, marking a slowdown from the 0.5% growth observed in Q2. These figures highlight the region's struggle to gain significant economic momentum during this period. And in Asia, China's economy grew by 4.6% year-on-year in the third quarter, marking its slowest pace since early 2023. Despite stronger than expected consumption and factory output in September, the ongoing decline in the property sector posed significant challenges. Authorities responded with increased policy stimulus, yet concerns remained regarding the sufficiency and effectiveness of these measures to sustain long-term growth. Thailand's economy, on the other hand, experienced its fastest growth in 2 years during Q3 in 2024, with 3% increase in GDP compared to the previous year. And this growth surpassed forecasts driven by stronger investment, tourism and exports. However, the National Economic and Social Development Council cautioned about potential challenges in 2025, including impacts from US economic policies. Emerging markets displayed a mix of resilience and vulnerability. Russia's GDP grew by 3.1% year-on-year in the third quarter, a slowdown from the 4.1% growth in the previous quarter. Now, the Russian government projected a 3.9% GDP growth for the entirety of 2024, supported by significant budgetary allocations and increased military industrial production amid ongoing conflicts. In Malaysia, economic growth likely slowed to 5.3% year-on-year in the third quarter, down from 5.9% in the previous quarter. This deceleration was primarily due to a contraction in mining output, though strong private consumption and construction activity helped cushion the impact. Economists predicted Malaysia's growth to average 4.7% in 2025, aligning with Bank Negara Malaysia's forecast. So the macroeconomic landscape in the latter half of 2024 was characterized by a delicate balance between growth and emerging challenges. While certain regions demonstrated resilience through consumer spending and sectoral growth, others faced headwinds from structural issues and external risks. And these dynamics underscore the importance of adaptive economic policies and vigilant monitoring of global economic indicators as nations navigate the complexities of the post-pandemic recovery. Now, let's look at the overall sentiment, because in the latter half of 2024, the cryptocurrency market experienced significant shifts in sentiment, influenced by a confluence of macroeconomic events, regulatory developments, and technological advancements. The third quarter of 2024 was marked by a cautious optimism among investors. According to CoinGecko's 2024 Q3 crypto industry report, the total cryptocurrency market capitalization declined by 1%, ending the quarter at $2.33 trillion. And this slight downturn reflected a market grappling with uncertainty, as major coins and tokens exhibited divergent trading patterns. Notably, meme coins outperformed other categories, becoming the dominant narrative of Q3 in 2024. The Fear and Greed Index, a popular gauge of market sentiment, oscillated between neutral and slightly fearful during Q3. And this fluctuation indicated a market in flux, with investors weighing potential risks against opportunities. The index's readings were influenced by global economic indicators, including interest rate decisions and geopolitical tensions. The US presidential election in November 2024 had a profound impact on market sentiment. The election of Donald Trump, perceived as a pro-crypto president, injected a wave of optimism into the market. Following the election, Bitcoin's price surged over 32%, reaching an all-time high of more than 93,000. This rally was driven by expectations of a more favorable regulatory environment under the new administration. Trading volumes on major exchanges like Binance and Coinbase saw significant increases, with Coinbase's volumes tripling the year's average during this period. Institutional interest in cryptocurrencies continued to grow in the Q4 of 2024. US-listed exchange-traded funds, or ETFs, tracking the spot price of Bitcoin recorded their highest daily net inflows on record, amounting to $1.43 billion on November 7th. And this surge in institutional investment was a testament to the increasing acceptance of cryptocurrency as a legitimate asset class. However, the market's exuberance was tempered by cautionary notes from analysts. The Bitcoin Fear and Greed Index remained firmly in greed territory, signaling potential overvaluation and the risk of market corrections. Now, experts warned of possible pullbacks due to profit-taking and heightened volatility, advising investors to remain vigilant. The future regulatory landscape remained a focal point for market participants. The appointment of the US Treasury Secretary under the new administration was closely watched, with potential candidates viewed as more crypto-friendly. And this anticipation contributed to the positive sentiment, as investors hoped for a balanced regulatory regime that would foster innovation while ensuring market stability. So looking at everything together, the sentiment metrics of Q3 and Q4 2024 painted a picture of a dynamic and evolving cryptocurrency market. While optimism surged following favorable political developments and increased institutional participation, underlying caution persisted due to potential regulatory changes and market volatility. As the year draws to a close, the market stands at a crossroad, with sentiment primed to be shaped by forthcoming policy decisions and economic indicators. So why do I believe retail is coming, right? Well, I'm not 100% sure, but I have a good hunch that they are. The only thing stopping me from truly believing that retail is coming, because a lot of people are still trying to make ends meet and having difficulties paying their bills, which means that those people don't have the funds laying around to invest into crypto or any other sort of asset. Which means that right now, the money in crypto is either the institutions and countries setting themselves up, or the participants already in the crypto space who are basically trading dimes and quarters with each other. Now, the reason why I do think that retail is coming is because in the past few weeks, I've been to 2 different birthday parties, and the people who attended that party thought I was a lunatic for investing in crypto and always considered me a money-centered kid. But this time, it was different. They asked me about my YouTube channel, they asked me about my crypto, and they also asked me if it was a good time to invest. They said they had been looking into getting into crypto and wondered if I could help them. Now that, my friends, at these levels we're at right now, is a big sign saying we need to prepare ourselves to use them as exit liquidity. Dumb money is now going to flow into crypto, and you already see it happening with this mini meme season that we're in right now. I've also had friends texting me that the dumbest friends they had were starting to talk about crypto, asking for advice, so that's another indicator. Because when everybody is starting to experience FOMO and diving into the markets before it's too late, that's when we will have a proper bull run, and that's what we need to prepare for. I'm already out with my initial investment, and I'm now riding the wave of profits. The only time I'm taking money out right now is to pay the bills, and other than that, I'm just waiting to see what the future brings. But one thing is for sure, because this is my second bull market, and I'm not gonna make the same mistake I did last time, which was not taking profits on the way up and riding it all the way down. That's it for now. I hope you all stay safe, and I'll see you guys next time. Doei!